you doing today? So, real quick, just wanted to give you the update of the morning. Got my second cup of coffee here. I know you're all really concerned. So, first off, it looks like the S&P 500 hit a record this morning. If you remember I think it was last weekend, not this one that just passed, but the one a week before. I proposed if a couple of things went right and the earnings came in okay or better than expected, that we could see this, and it looks like it happened. So yay us, we got another one. Again, that's really being pointed at earnings were better than expected, and again, trade progress. You have the Fed strike, or I'm sorry, the GM and UAW strike ending. So again, kind of a positive wave of good news. Not to mention probably the little bit of nationalist pride from taking out a bad guy over the weekend. So enjoy the day, enjoy the record. But I do got to ask you a question. So the stock market's at an all-time high, or very close, right? Why are we asking the Fed to lower rates? Why is there a 90% expectation that they'll lower rates this week? And I'm in that 90%. I agree, right? I think they will. But it's something bothers me about that, right? We're at a record high for stocks, and yet we're clamoring for an interest rate reduction. It just feels wrong. I don't know why. It just feels weird. But again, I think it has to happen. I think the global economy is slowing. I think the strong dollar is hurting. I think a lot of the world is negative interest rates. So even though we're low by comparison, we look high, if that makes sense. So I kind of get it, but what are we going to do if there is a recession? Or should I say, not if, when, right? Maybe it's years away. Who knows? But it just feels like a game's being played around all of us. So I don't know. Just something that was bothering me this morning. But as expected, I think about 2 months ago, I said that was something that was going to become very prevalent was leveraged buyouts. Basically, debt is so cheap that people are going to take out big brands. So we see an example of that today. A French conglomerate or a French luxury group, LVMH, never heard of it, but they got some chops. They just did a $14.5 billion offer for Tiffany, right? Which is that luxury retailer, the little blue box that we see all over the place. So no idea if this will go through. I don't even know who LVMH is. But the point of this is when debt is cheap, people go shopping, and it's not only people, companies. French luxury groups go shopping because it's not worth anything. So if money's cheap and you're told to borrow, I guess you borrow, right? So looks like Tiffany is a brand that could be on the block. Now they could say no, which I doubt, because their stock went up 31% as of when I looked at it this morning. They can get another bid. Who knows? Ah, Troy, thank you. LVMH is Louis Vuitton. See, I love it when you guys respond to me because I don't know these luxury things. I'm cheap. Does my wife have a Louis? No, I don't think we have any Louis Vuitton stuff. That stuff's ridiculously expensive. Um, so that's happening, right? Cheap stuff, or I'm sorry, cheap debt means people go shopping. I think we could be in for a couple of years of big giants gobbling up big companies such as this. So that's that. Looks like the EU has agreed to extend the Brexit decisions for the UK out until January 31st. This is actually the third delay. Um, I don't get it, right? If do you want in or out? I mean, I understand it's a lot more complicated than that, I'm sure, and trade agreements and all of those things, but I might be mistaken, but didn't the UK voters vote for this like 3 years ago? So I don't know what's going on there, but another delay till January 31st, so about 90 days, I guess. So we'll see. You know, third delay though, so at some point, all the power people will be voted out of office, and you have to start over. So we'll see. Another thing that's pretty common these days. It reminds me of something I read a lot about back in it was probably the 80s. All these activist investors coming in and bullying companies around. Well, it looks like an activist investor, Elliott Management, has successfully wormed its way into AT&T and gotten some pretty significant agreements already. They're going to add two new board members. It didn't say, but guess where those are coming from? I'm guessing Elliott Management. Shocking. And they're going to be selling off $10 billion in non-core business. Basically, AT&T will be shrinking, and all at the pressure of Elliott Management. Again, these are, back in the day, it was called green mail, right? Because they didn't want to call it black mail. They called it green mail. Um, it seems that that's going to be happening again. And again, why is this happening? It's because debt is cheap, right? Do you think Elliott Management really had enough cash to buy up enough shares to do that? No, they had leverage. They took on leverage to buy the stock to then take on AT&T. So again, another reason why debt is cheap, causing activity and churn in the systems. Here's another one for you. The strong dollar could be blamed for hurting global economic growth. And the story is like this. Basically, historically speaking, when the US gets slow, or the Europe or China or Asia gets slow, it's the emerging markets that kind of save us, because they grow faster, right? There are smaller bases, so when they grow faster. But there's an interesting juxtaposition today. Historically speaking, these emerging markets have borrowed in dollars, but the money they get back when their goods are sold are euros, right? Because they sell to Europe mainly. So it's interesting, right? So not only they're borrowing dollars, but they're getting euros, and guess what? That trade-off in currency they're being hurt by, to the tune of about 5%. So that, borrowing dollars and receiving revenue in euros can be a good thing if the euro was strong, which it hasn't been this year. So it's just interesting. I heard a new phrase today that I wanted to share with all of you. People are now, probably everybody watching this realizes that Japan is has that lost decade where basically rates were low and no growth. Yeah, Ray. Yeah, it is good for travelers. If you want to go to Europe, go now, because the euro is cheap and the dollar is strong. So thank you for interacting with me, Ray. A new term that's being thrown around about Europe. Yeah, yes, American travelers, definitely. Is the Japanification of Europe. Try to say that word. Japanification? That can't be a real word, but you get the idea. Basically, Europe is setting up to have a lost decade of no growth and low to negative interest rates. So if that's true, how do we sit back and take advantage of that, right? If these are all the things that we look out for, because again, we're trying to look at the chessboard and trying to move around. So if Europe is going to go through a 10-year zero growth, what do we do? And then last thing, just to show more pain in Europe, HSBC, one of the largest banks in the world, is now cutting 4% of its workforce. They called it a remodeling of the business. I don't know what that means, remodeling. Basically, they're going to fire a lot of people, take some charges. They warned about Q4 taking a huge write-off and charge. So profit dropped 18%, revenue down 3%. So not good. So in the end, pretty exciting day. Again, S&P at a record. I feel very oddly about the Fed lowering rates when the stock market's at an all-time high. That just feels weird. It certainly feels non-normal. And again, I'm in the camp that says we should have a rate cut, so it's not like I'm bashing the decision. I'm just admitting that it feels weird. That's all. So let me know what you think. That's what I got today. I have 2 exciting interviews for you today later that I'll be doing and posting. Divergent high, just like the last 3 times. Good point. Money Maven. Thanks for reaching out. So yeah, we'll talk to you tomorrow, and we'll get some interviews up later in the day. Take care. Bye.